Bring in the president of Blue Line Futures, Bill Baruch. Bill, it's good to see you. And what is this price action telling us?
Yeah, I mean, I think we are getting a little bit of peak inflation story here. What the Fed's doing has worked, but this is also a story here in each sector, whether it's agricultures or energies, they have their own narrative. And for ags right here, there was cold, wet weather that it was tough to plant in, say, Iowa, Indiana, Illinois. These are big producing states. And we've had very good hot weather supporting the planting. And that's been that was a very bearish for price action here. You also have some positioning dynamics, not just in ags, but again, across the board here. Options on July futures expired today. So I think that helped drive positioning down a little bit. And same way crude sold off last week. July crude oil expired and those options expired last week.
So we are at a juncture where we have oil prices dropping, metals falling, the softs underperforming. Should investors take this all as a pause in a bull market or as the end of it?
Listen, for now, I think it's a pause in a bull market. What the Fed has done, I mean, they've tightened financial conditions. You're seeing some disinflation take place here right now. And that, ultimately is going to allow them to, again, take their foot off the gas potentially. If I'm looking at the CPI numbers that come out for June, July, and August that come out in July, August, and September, that's really been my narrative is, you're going to have an inflation showdown at Jackson Hole in August. And I do think that the CPI numbers are going to cool. What the Fed has done, starting at the end of last year, mortgage rates reacted, financial conditions have been tight, and obviously there was some supply chain bottlenecks in the war in Ukraine that lifted some premiums on a number of assets, but that's worked through the system. So I do think that the inflation is going to be lower when the data comes out, and it's going to re-support commodity prices. So I definitely look a little more positive in the future here.
So let me make sure I'm understanding you correctly. I think you said a moment ago that yes, maybe inflation is peaking, but no, when I look at wheat and corn and soybeans and things like that, the sell-off that we've seen is not really because inflation is cooling. It's more because planting conditions have gotten better, and that this is a pause in a bull market. And that would suggest that prices are going to begin to rise again in these soft commodities and maybe even in some of the hard ones. I'm a little confused.
Absolutely. So you do have what the Fed has worked to disinflate the economy, and I think that's been weighing on prices. You also have positioning-wise. I mean, investors, whether you're a portfolio manager or a retail investor, you're chasing the narrative. I mean, there's people that had no energy exposure buying energy stocks when crude oil is trading at $120. Of course, this thing's going to roll over at some point. And we're looking at this as opportunity because, we've been long this narrative for quite some time. Just last week, to put this in perspective, XLE had the week 3 options expiration, and nearly 1 billion options that were in the money to start the week expired worthless. I mean, so you're looking at greed losing again. I think what you're seeing here is these prices coming in as people chase them at highs. And the same way, let's shift gears here, talk about the equity market. The equity market, you have people panicking out on the lows. I mean, obviously, you should have been managing your position for much of this year, not just managing it over the last week to two after May's CPI number was hot and you had additional selling. So what we saw last week in the equity market was record volume on Russell 2000 futures for the week of last week. And then for the S&P and the NASDAQ futures, you had the highest volume since going back to March 2020. And then you also saw some Bank of America numbers today that did say that about, I think it was 17 billion of outflows for the first week of outflows in equities and going back 7 weeks. So people are panicking down there. I mean, you're seeing selling really kind of across the board as people chase those commodities up. They're liquidating now, and I think that's going to be a buying opportunity around the corner.